everyone. My name is Trisha Fomby, and I am a self-sufficiency coordinator here at CMHA. And today we are happy to have John Russo here with us from Fifth Third Bank, and he's going to continue the presentation we started earlier in the year on credit repair. So, Mr. Russo, if you are ready, you can go ahead and begin.
Thank you. Thank you. And everyone, thanks for making time on a Friday afternoon. I appreciate you guys inviting me to the call. And I'm filling in for a good friend and a coworker that I've known for over a decade. That's Dean Johnson. And if he could be here, he would, but he's asked me to fill in. I have the workshop credit scores report PowerPoint in front of me. And Anna, if you want to tell me where we're picking up. Hello?
I don't think this was the presentation that he had, so you can just start at the beginning.
Oh, that's fabulous. All right. With regards to the audience, I would like to make a few assumptions that some of the people on this call are going to be first-time home buyers. Is that correct?
At some point in time, I think they're hoping to be.
Right. Everyone has to start somewhere. What I've said for 27 years, it's never too early to start the conversation. During those 27 years, the process has not changed. The process of having a conversation has not changed, although the technology and the paperwork has. The process, no matter where you go, ends up being the same based on someone's income, someone's equity, and someone's credit. So, of course, we're going to spend a great deal of time talking about credit scores and reports. And if there's time at the end, we can talk about the other two variables, income and equity. But today we're going to focus on credit scores and credit reports. This side of the industry has changed a lot over the last decade, and you need to take into consideration the importance of what a credit score is. That credit score reflects one's ability and willingness to make a payment. And whether you're getting a quote for your car insurance at State Farm, Allstate, Progressive, or whether you've taken a bigger bite and you're going to buy a house and you need to get credit at a bank, that credit score is critically important. So spending time this afternoon going over the credit scores and the reporting of credit is a worthwhile endeavor. All right, I'm going to go to the second page, talking about the goals of what we're going to go over today. Okay, I can't stress enough the importance of keeping track and having a good credit score and not being caught off guard. All too many times, people will think they want to buy a house, prepare, they'll start to save, they'll accumulate the money, maybe through a gift, through a conversation, an inheritance. And although they now have money to buy the house, they don't have the credit score. You must have all three. So the importance of having that credit score is important. Today, we're going to learn about how to access information about your credit reports. We're going to talk about where to look, right? And then, of course, with 27 years experience, we're going to discuss some strategies and how to build and improve your credit. A little side note here, if anyone's taking notes, discussing strategies to build and improve your credit. Credit that is damaged because of inaccurate or just wrong information exists on many credit reports. So it's really important to have a strategy in place, to use technology, to use your calendars, to make sure that you're looking at your credit on a regular basis, to make sure that no one is accessing your credit and there's nothing that's derogatory or incorrect. It's critically important, not kind of important, it's critically important. Number 4, we're going to identify how to protect your credit from incorrect claims and fraud. And that's probably, unfortunately, in the news more than it ever has been. Okay, let's just jump into the next page. What is a credit score? A credit score is a 3-digit rating that tells a lender how likely you are to repay your debt. That credit score is indicative of one's ability and willingness. And the banks know that someone with a higher score has a higher probability of making that payment. Someone with a lower score gets thrown into a group. This group might not pay as well as another group, right? And so if you're looking at the chart, you can see less than 579 by definition is considered poor, right? All the way up to 800 and above is exceptional, okay? The difference and the time and the effort it takes to move from poor to fair and fair to good, good to very good, might take a little bit. So it's never too early to start the process. It's never too early to align with the right group and make sure that you're getting the right information. So when you are ready, you're completely ready with your assets as well as with your score, because that score is really important. A little side note here, by the way, right? The world really starts at 600 and higher when it comes to lending. Over the years, over my nearly 3 decades, there are lending conversations that drip below 600, but those programs aren't always advantageous for the public. And let's be honest, we want the best loans for everyone equally. So one way to assure that you're going to get that is by having the right credit, having the right credit scores. Okay. All right. I'm going to pause here for a second. I'm going to read the note. These credit score ratings are for informational purposes only. Lenders like Fifth Third and other companies that use credit scores set their own guidelines. So Fifth Third is a moderate risk lender, and we will lend down to 600, right? Someone has a 600 with no recent bankruptcies or no recent foreclosures. We're having a conversation turning a renter into a homeowner. Okay, it all starts with that score. All right, we're going to flip on to the next page. Some strategies, right, to build credit. A lot of young adults today are starting off, and they're at a disadvantage. They don't know how to get a credit card. They don't know how to get credit. So building credit, obtaining credit, and then keeping a good credit profile is critical. And step one is to open a line of credit. Okay. Fifth Third Bank, like many companies out there, have a product at the retail branches, right, where you could come in and give the bank your money. I'm just going to use an example. $250 of your money goes on to your new credit card. And then you use that credit card with your money to buy gas, food, some basics throughout the course of the month. And every month you make your payment on that card. At the end of a 12-month period, that score can be reported, that rating can be reported to the 3 bureaus. The names of those bureaus we're going to get to in a little bit. But now all of a sudden, someone that had no trade line or a limited trade line is able to show 12 months of a payment history on a revolving debt. That's awesome. That's how it starts. It should never start. I don't know if I'm allowed to say this, but I will. Anna cut me off. But going to a payday company and having a revolving loan where the rates are 22, 23, 24 or higher percent or higher, those are troublemaking cards that can get into a whirlwind of difficulties. But a bank line of credit, a bank credit card, is a great way for someone who wants to open and establish and grow their credit. Okay. An optional choice is number 3, where you open up a joint account, right? So you know where your credit is, and you're working on it, and the other person has a more of established credit scores, maybe a little higher. Now you open a joint account, and together you get the benefit of this new account. That's a strong way to help build credit. It's a good strategy. Okay. Number 4, the most important, I'm going to asterisk this myself. Pay all of your bills on time and in full. Never miss a payment, right? There's 12 and a dozen, right? It just makes sense. There is a lot of life. Bankers, loan officers, men and women in my position, we understand this. We see this. We understand that everything is very expensive and sometimes it's just difficult to make your payments. But when you miss a payment on a car, when you miss a payment on a credit card or an installment loan, it becomes a late mark against you, and that will drop your credit score. So it's really critical. A strategy: pay all of your bills on time. As I read through the Anna, as I read through the presentation, I didn't see anything that talks about using rent to help bolster someone's credit score, right? So if there's time at the end, I might want to throw a small commercial in on that. If we
Sure,
have time.
thank you.
Right. Everyone, I mean, we all know people that are renting, and some of those people might not have a score, but they also might not know that Fannie Mae, one of the investors, right, has a specific program that will help someone bolster their scores, right? All right. Also, as we're going on here, if I use a phrase or say something that anyone on the call doesn't know, Francine, I'm going to call you out because I love the name. If I use a phrase that someone's not familiar with, interrupt me, ask me to elaborate, okay? But again, I'm a bank, right? Fifth Third Bank out of Ohio. And when I reference Fannie Mae is one of the 4 investors out there: Fannie Mae, Freddie Mac, VA, and FHA. We all know people that are homeowners, and chances are 99.9% of the mortgages out there in Cleveland are with those 4 investors through the banks, like Fifth Third Bank. Okay. All right, go on. Let's talk about the next page, A Tale of Two Friends. Anna and Bella have been friends since middle school. They both own cars and have steady income to pay their bills. Anna's credit's a 530, right? So we know that's well below where we need to be, while Bella is a 700. All right. They both have cars and they both have steady income. Okay. They decide to buy homes to their childhood neighborhood, which I think is a great idea, being a Clevelander. One of them receives a loan without any trouble, and the other has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premiums are higher than her friends. Let me just break that down, right? Your credit score has a direct correlation to the rate you get on your mortgage and the payment that the insurance company will charge you. So again, it's critically important, not a suggestion, but it's critically important to make it a priority to stay on top of your credit and make sure that it's going in the right direction quarterly, if not more frequently. All right. But again, 2 identical twins here, and one gets a great favorable terms and the other one gets fairness, but not as fair because it's a higher risk. The lower the score, the higher the risk. Okay. Any questions up here? Okay. All right. We'll go on to the next page here, credit bureaus. There are 3, I referenced this earlier, there are 3 main credit bureaus that we use in the US, okay? And at the bottom of this page, you see that it's on the left-hand side, Experian, Equifax, and TransUnion. These are the 3. And everyone's on the internet looking, Dick's Sporting Goods, Macy's. My suggestion, my recommendation, in addition to checking out a webpage like fifththird.com, check out these web pages, Experian, Equifax, and TransUnion. There is a plethora of information that will help someone get ready to get their scores where they need to be, and suggestions. It's great that we have housing networks and banks that want to spend time with you. But again, self-reflect, spend some time on these websites. I still go back on a regular basis because I know how important that credit score is. Okay. Let's talk about how these 3 bureaus calculate a credit score. Okay. So the next page, please. Thank you. All right. At the very bottom, where it's 6 o'clock, where it says new credit, right? So new credit, opening up a new card represents about 10%. That's the bare basics, right? You need to have credit to get a credit score. It has to start somewhere, right? I referenced earlier that card at the bank, a bank credit card, right? Types of credit. So let's talk about that. What types of credit? There's a revolving credit card versus an installment loan. My first car note was with a bank out of Cleveland called Key Bank, right? I took it out for 60 months. I paid $214 a month. And at the end of that 60th month, I had a trade line on my credit report. Previous to that, I had opened up a credit card. So I had one credit card. I had one installment loan. I made both payments on time. I paid off the credit card every month that I could. I couldn't pay it off every month, but heck, I paid it off as often as I could. And lo and behold, the first time I looked at my credit, I was a 690. I was like, well, I should have an 800 score. And I had a 690. I didn't have a lot of credit. I only had 2 items, even though I paid them on time. And it wasn't until I had a little more established history did my scores quickly go from 690 to 710 to 740. Okay. Let's take a look at the top left-hand corner where it says amounts owed. Amounts owed, yes, amounts owed, right? So let's just use a basic example. I have a credit card, and that credit card has a limit of $1,000, right? $1,000, right? If I use that credit card for whatever type of essentials I need to use it for and take out $500, I'm at 50% usage, right? 50% is worse than 30%. If I only took out 300 versus someone that's carrying a balance at $900, that's 90%, right? So we want to make sure the balances on our cards are not maxed out. And I'll pause here for a second, right? Was there any questions out there? Anybody? Okay.
I just add one to the chat, John. Where can the residents ask questions about their credit score?
So if someone has a question about their credit score, right? The very first thing I would want to do is make sure that I have a copy of my credit report. So when I'm asking questions with specific account numbers. I'm asking questions with specific balances and or information that's accurate or inaccurate. And everyone on this call and everyone we know can get a free credit report annually. And we'll talk about how to get that as we move through this, this PowerPoint presentation. But most definitely knowing who to contact, the bureaus, Equifax, go back one page, Equifax, Experian, and TransUnion, right? Those are the bureaus. Not every creditor reports the same information to each of the credit bureaus. So the importance of getting your free annual credit report is to see where you have issues that need to be addressed. Okay. And again, it's not uncommon for the bureaus to take phone calls from the public to help with these questions. Anna, did that help?
Yes, thank you.
Sure. All right, let me look into that chat box and see if there's any other questions waiting for me. Hang on, please, everyone. There's 4 questions. Hang on, everybody. Bells, your question, what does credit bureau display a different credit score? Okay, hey, is it Bells? Is that correct? Yes, Bells, I'm going to come back and we're going to address that question, right? And that question is in the chat box. As you have questions, keep throwing them in there, and I promise to answer all of them to the best of my ability before we end the call. Okay, let's go back up to the chart, right? Calculating a credit score, that payment history. Payment history, 35% of how I make my payment history goes into that credit score calculation. That's pretty heavy, right? So if I pay on time, you know it's clean. If I start to miss payments, all of a sudden my score will drop, right? An installment loan versus a revolving credit card, right? You really, really want to make sure you pay your installment loans first, just like you would your rent, just like you would your car note, right? Some people that I've worked with over the years, they said, John, it came down between me making my car note or my electrical payment, right? The electric payment is not always going to be used to check someone's credit, right? So you'd rather have a missed payment on an electrical bill than something that reports to a credit bureau. Remember that credit bureau, if you start missing payments, your score will stay down or your score will drop. Okay. All right.
I'm sorry, I need to ask you a question before you continue.
Yes.
I have a couple credit cards. I use 3 of them. But I pay a minimum pay. I did not pay full. My credit score is still going down. Nothing changed. I have to pay full, or just I have to pay minimum. Because they told me, the more you open credit card, the more your credit score go up. I have a couple credit card, but I use 2 of them. The other credit card, I don't use it.
Okay.
What should I do? Thank you.
Happy to help. I'm more than happy to help. First things first, we want to make sure that you are utilizing the credit availability correctly, right? Paying the minimum balance might not move the actual percentage that you have available, right? I have a limit of I have a limit of $1,000. I have a balance of $900, and my minimum payment is $50. If at the end of the day you pay just $50, your balance is still $900. Your balance is still at 90% of the limit. So you've got to make chunkier payments. And we know that's tough, right? We know that it's tough, especially if there's a high interest rate on that card. So,
right.
Okay, so the score goes down or the score stays the same when the percentage, right? The amount owed, right? Again, look at the chart, please, top left-hand corner. When the amount owed goes down and you're no longer maxed out, your scores should get better. Now, that's assuming that you're not late, in this example, on anything else, right?
Right.
So it's across the board. You want to carry low balances compared to your limits, and you want to make sure everything is paid on time.
Yeah, example is $2,000, but minimum pay is $25 a month. You know, that payment.
Interest, right? Just the interest, right? You're that $25, $24.99 goes to interest, and maybe a nickel goes to pay down the principal.
Yes, because I'm confused. I don't know who I can ask and how I need to build my score. You know, I don't know. I was confused. Thank you for you explain to me.
Sure. Okay. All right. Let me continue on here. The last part of the equation is the most important in my eyes, right? We all have to start somewhere. And the length of the credit history ties into your oldest card, right? So if my oldest card is a horrible credit card, but I've had it for 5 years and I need that because it shows someone who's looking at my credit that I've had credit for 60 months, it's established, right? The only way that I say that no longer comes into fashion is if they're charging me a heavy annual fee, right? But you want to make sure you do not pay off your oldest credit cards and close them. It is okay to pay them down to zero, but if you close that card, it goes against you. So the length of your credit history is truly important. And the way the bureaus look at you, a closed card versus a card with a zero balance, makes a difference in how that calculation is tabulated. Okay, next slide, please. All right, and what is a credit report? All right, so it's a snapshot of your profile, including your credit history, right? That credit score is indicative of one's ability and willingness to make payments. Go back to the two sisters, right? Bella and her sister. One had a 500 score, one had a 700 score. They both had good income. It's the ability and the willingness. When you have that higher score, you're showing people that are looking at your credit history that you have a willingness to pay things on time. From a bank standpoint, from a lending standpoint, all of a sudden, we know that that is a good sign. A good score is a good sign that someone is going to be a good risk, and we won't risk losing the house to foreclosure, that this person is going to make their payments on time. And there's all kinds, as you all know, there's all kinds of counseling and coaching and preparation, and you cannot get too much education before you start the process. And as I'm going to continue to say throughout the call, it's never too early to start. If the dream is to own a house, if the dream is to stop paying someone else's mortgage and to buy your own property and create wealth, it starts with understanding the basics. Someone needs income, someone needs equity, and someone needs good credit. And by the way, there's no such thing as marginal credit. It's either good or it's not. It's usable or it's not. It's much easier to get what you want from a lender with regards to terms and conditions that will benefit you and help your family when you and your co-borrower, right, have good credit, right? It doesn't do anyone any good if I'm going to use two people, husband and wife, brother and sister, sister and sister, right? If two people are going to be on the loan, they both have to have good credit, right? If I have someone who has a 620 score and great income, and the co-borrower has a 598 score and great income, I'm still left in the dark because both borrowers need to have good credit. Okay, so what is a credit report? Snapshot, right? One's ability and willingness to make payments. Thank you. Thank you. Okay, getting your free credit report. Appreciate that. I referenced this earlier. Everyone is entitled to a free annual credit report. And there's the information there. There's the website you can go to. Anna, I will send you something from the CFPB that I send out. If you want to send that out to the group when we're done, you're more than welcome to. But on page 7 or page 42, it's this information, annualcreditreport.com. And everyone, please be aware, there are scam artists out there. There are companies that make it look like it's this annualcreditreport.com. And all they want to do is get you on the phone and try to sell you something. It's a free credit report, right? So it's important, really important, critically important that you go to the correct website to get a copy of your report. So what do? Right now, you've got your credit report. It was mailed to you. It was delivered to you. What do you do with it? The first thing I'm going to tell customers is you scrub it. You scrub it for inaccuracies, right? I can't tell you how many times people find incorrect information on their credit reports. And there's a way to correct it. But if it is on there, if there is something that's derogatory, we want to try to get in front of it and pay it, right? When you pay it, just paying it is not enough. I'm going to give an example here, right? I get my free credit report and I look at my credit report and it says that I owe Verizon $100 from an old apartment or an old cell phone that I had, right? $100. So now I can pay Verizon, and I think I'm okay. I've come clean. I've paid my derogatory information on credit report, and I move on. But next month, my score doesn't move, right? We need to make sure and have the creditors held accountable that they update the bureaus, right? So you need to communicate with them. How and when will you update the bureau? And when will I be notified, right? And I know it sounds like a lot of overkill. I know that I'm asking you to do something that is completely out of the norm, but this is what has to get done when you have something on your credit report that is incorrect, that is faulty, or more importantly, needs to be updated. If I just pay the debt and I don't go deeper, and make sure that it's updated on my credit reporting, all three bureaus, I've only done half of the battle. Does that make sense? Anyone?
Yes, it does.
Thank you. Right. All right. That comes up in my side of the sandbox way too often. Okay. Bottom of this page, you can also get a free credit report in cases of fraud, right? In case you need to apply for welfare, or if you're denied a loan or credit application. Okay. All right. Let's go on to the next page, right? Request your FICO score, another service that's out there. Okay. myfico.com is a website, but you will be charged a fee. I think it's safe for you to go out there and take a look at this website, right? But knowing what your FICO score is, knowing what your credit score is really important, right? So in the chat box earlier, there was a question, why are there different scores, right? And that's a real question that bankers, loan officers like myself are asked on a daily basis. So let's pause for a second. Each of the three bureaus have many models of how they calculate credit scores. On the record, I'm saying it shouldn't be this difficult for the American public to know what their score is, but it is. It is confusing. It is confusing and cumbersome, right? But you just have to recognize that these companies, these are for-profit companies, have different models for different industries. The best way, the very best way to know you have a good score is to make your payments on time. The next thing is to continue to make sure that you monitor your credit by looking at your annual credit report and remembering it's never too early to start the conversation. And as a side note, don't let people pull your credit unnecessarily, right? As a bank loan officer, I do not need to pull credit to see if you're going to qualify for a loan. I can ask you specific questions. I can dig into those questions to see if we're going to have issues, right? A couple times every day, I reference annualcreditreport.com. I want people to know what's on their credit. They're telling me they think their scores are below 600. Then me starting a loan application and pulling credit doesn't do anyone any good. We want to make sure that we have the right credit score in addition to the other needed items. Okay. All right. Next page, reading your credit score, right? There's public records. There's personal information. There's credit accounts. We've talked about the credit accounts, cars, credit cards, student loans, right? And then credit inquiries, right? A credit inquiry, when someone says, I'd like to look at your credit, do I have permission to pull your credit? They are going to pull your credit. And depending on a few variables, that could lower your score. So you just want to be really careful on who and why people are looking at your credit. When someone is ready for a mortgage loan, having credit pulled is essential and needed. When you're getting car insurance, I'm going to say it's probably essential and needed. When you're getting homeowners insurance for the home that you're buying, it's needed, right? but there are so many other people reasons people go out there and get credit. They want to open up a new credit card, even though they really don't need one, right? You want to be cognizant, you want to be aware, and not open up too many new credit lines. Okay. For what it's worth, public records, back on this page where it says public records, I said there's inaccurate information on a lot of credit reports. My name is John Russo, right? You can't get much more vanilla than that, right? John Smith, John Jones, but John Russo, very popular first name, very popular last name. And over the years, and I've been at this for some time, every once in a while, another John Russo's information shows up on my credit report. How could this possibly happen? Well, my middle initial is C, right? John C. Russo. When I go to see a doctor, if there's another John C. Russo and there's someone who's not paying attention, and that John C. Russo falls into a payment plan with the doctors and goes to collections, it might end up on my credit report, right? Might turn into a collection, right? Well, the same way that takes place and affects the scores, lawsuits, bankruptcies, judgments, and unpaid taxes can also hold someone down, right? Okay. Important dates to review on your credit report, okay? You get this free copy. You get this copy of this free credit report at home, right? You're going to want to look at the accounts you have. You should recognize the accounts you have. Did a niece or a nephew open up an account in your name, right? And it's on your credit report and you don't know about it? Now is the time to get in front of it, not when you're ready for the loan. Get in front of it early, right? All right. The dates of delinquency. Let's talk about this, right? I'm going to use myself as an example, right? But it's 2024, and I have not had a moving violation or a speeding ticket in over 7 years. So for 7 years, I've been somewhat of a good driver. Haven't been caught speeding, haven't been caught with a moving violation. 7 years, right? My insurance company says thank you, and they have not raised my rates because of my poor driving. Okay. A credit score is a lot like a speeding ticket. The more time that is in between the late payment or the derogatory credit and the current snapshot in time makes a big difference. If I was late on my credit card, 30 days late, back in 2020, right after COVID, right before COVID, right? Or during COVID, and now I haven't been late since. That's a derogatory mark. It's a delinquency, but it's old. It's really old, 4 years old. And it was just a 1 times 30. It wasn't habitual. There weren't 7 cards all late at the same time. That's a complete fail, right? So the dates of delinquency make a difference in how your score is reflected, okay? The dates of the public records, right? That's important for you to check. And then the dates of credit inquiries. You should know when someone's looking at your credit because no one can pull credit without your permission. So when you get your annual free credit report and you're going through line item by line item, and you see that your credit report was pulled by ABC Credit, you want to know why. You don't remember giving them authorization to pull your credit. Why would they want that information? So again, having access and getting that free credit report is critical to maintaining and keeping a good credit score. All right. All right. I'm going to read this next page verbatim. Credit.
Can you hold on just a minute? We would like to hold the slides for now and go to the questions in the chat to be mindful of people's time. And if we need to come back and bring you back to finish the slide presentation, if you would be so kind to do that for us.
Yeah, of course, of course. All right.
Okay,
So
but we'd really like to get to the questions in the chat.
Understood. All right. So thank you. I don't know who that was, but thank you. So I'm going to go back to the chat box here. Where can I ask questions about credit score? That was Anna. You're good there. How often is my credit score updated? All right. So one of the questions here is how often is my credit score updated? And the answer is it can change month to month. Okay. In my quick example, I have 3 cards. Each card has $1,000 balance. Each card has $1,000 limit. That's in January. In February, I make my payments because I get a bonus or I get overtime. And now, when March comes around, I have a 0 balance on all of my cards. My scores will look different month to month, depending on what my balances are. My scores will look different based on how I make my payments. I hope that answers the question. Okay. Bells, you asked earlier, why does each credit bureau display different credit scores? And I didn't answer that specific question, but I talked about models. Each of the bureaus have different models to assess the risk. So hopefully that helps a little bit here. Let me go to continuing here, some of these additional questions here. Do medical bills of, this is from Takasiha, do medical bills affect your credit score? And medical bills alone do not. Medical bills that have gone into collection sure could. Okay. And now let me reference something a little deeper, right? A medical bill, a collection. And I'm going to use something less than $2,000, right? So I've got 4 medical bills. They're each at $400. So I have $1,600 in medical bills. Each investor, Fannie Mae, Freddie Mac, FHA, and VA, are going to look at that differently, right? So, of course, the gut answer is yes, please pay those medical bills, right? But in reality, right, you can still get a loan at 97 or 96.5% loan to value with having medical bills that are open. It is more important for someone, for you, to have money in your checking or savings account than it is for you to pay that medical bill. Okay, but yes, they do affect the score. And then the second half of that question, should we trust the companies and people that claim they can fix your credit report for a fee? Wow, that's a great question. Anna, how much liberty do I have on speaking on this?
You can explain.
Okay. All right, everybody. There's a lot of information out there on the web. And these people that are earning a fee, charging a fee, taking your money, are doing it because they believe they are providing you a service that you cannot do on your own. In my 27 years, each year, there are more and more companies claiming to do this. Some of them are established, some of them are new, and they all want to charge a fee, right? No one wants to work for free. It has been my experience that a lot of what they do can be done by yourself. You're better off first trying to do it yourself or working with a nonprofit agency that will help you. I do not see any true benefit ever in life paying someone to do something that you might be able to do yourself. Ugh, I don't know how to use a computer. Ugh, this is difficult. Find someone in the family, right? Someone will help you, right? There are ways to do it. Save your money. Life is expensive. All right. Read in between the lines, everyone. I gave that the best answer I could.
Can we go back up? I think we missed a question.
Might have done that on purpose. Okay, hold on. What was that question? Read it out loud.
Therefore, is it best not to use all of the 1,000, instead use 300? By doing so, what will this do for your credit exactly? And how does it help your credit and why?
Okay, I found it here. Okay. Therefore, it is best not to use all of the 1,000. Instead, use 300. Oh, correct. All right. So in my example, someone has a credit limit of $1,000, right? Fifth Third Bank said, congratulations, here's a credit card with a $1,000 limit, right? If you use all $1,000, your usage is at 100%, right? Your score will be low because you have maxed out that credit card. Conversely, If you only use that credit card and $300 for the month, right? You're at 30% usage. And yes, it is doing better at 30% than at 100%. By doing so, what will this do to your credit exactly? I can't tell you exactly, right? I can't speak in those specifics, but what I can tell you is the more distance between the actual balance and the actual limit very well leads to having a better score, right? If you're at 100% usage versus 30% usage, you're more of a risk. If you're more of a risk, your score will be lower. And if you have multiple cards that are maxed out, right, it's not a good scenario to have a good score. Someone asked a question beneath, and again, I may be bouncing around here, but we'll get to all of them, I promise. 416. What is the difference between a credit score and a credit report? Simple, right? A credit score, each of the three bureaus, Equifax, Experian, and TransUnion, each develop a model that gives you a credit score based on judgments, delinquencies, collections, public records. A credit report is a collection of all that information. And it's actually called a tri-merge credit report. Okay. Hopefully that answered that question here. How many, hold on here, going down here. How many, all right, hold on, please, everyone. Do you have templates that can use dispute inaccuracies on our reports? I don't know if there's templates that are used, but my suggestion to, I think it's Johnson, use a chat bot when you're on the website of the Experian TransUnion or Experian, and have them tell you how and what is the best way, how to get documentation to dispute. Okay, and there are special rules when it comes to disputing, and there are special timelines and time restraints on how long a creditor has to respond to you, right? You can't say, hey, that's not my medical bill. I never lived in Mississippi. And now 30, 60, 90 days pass and they haven't resolved the issue, right? That's a problem, right? So hanging out and visiting a website like Experian, TransUnion, or Experian is well worth your time. All right. Okay. Someone put my information up there. Thank you, Anna. Yes, I'm a loan officer. I have a loan number, right? There's my email. You're always, everyone on this call is welcome to email me, john.russo@53.com. I will respond to everybody, right? And all you have to do is let me know what your questions are. All right. Contact information, templates. I'm working up backwards here. What daily online website can we use to check our credit score? Daily might be too much, right? Which one would you recommend and why? If there are no good websites you could recommend for daily viewing, why? Great question. Great question. Okay. I do not rely on any website for a daily checking of my score. Rather, my Fifth Third credit card, right? My Fifth, it's a debit card. When I get my statement, it's an electronic statement, it gives me a snapshot, right? And it says my score is 690. Okay, well, I know my score hasn't gone up or down since last time I pulled my annual credit report, right? The problem with that is that the credit score that the bank will show you on a credit card statement is not always the same that you're going to see on a tri-merge credit report. But do I think that someone needs to be looking daily at their credit? And in my 27 years, I think the answer is no, right? The better question there is, what do I have to do to clean my credit so I can be rest assured my credit score is where I need it to be and I don't have to check it every day? Okay. I'm going to talk about at the very end, I'm going to talk about freezing the credit, right? But I don't want to do that quite yet. Hang on, everyone. Bellis, thank you. How can I cheat? All right, here's a great question. Laura C., are you ready? how can I achieve 800 score or higher? Right. Okay. Got it. 800, that's like bragging rights at Thanksgiving, right? If you want to cause a fight within the family, right? How does one get to 800? Pretty simple. You make your payments on time. You have the right allocation of credit balances, credit limits, right? You make sure that there's no public records that are inaccurate. You make sure there's no bankruptcies, no foreclosures, and you make sure that everything is paid on time. I have poor teeth. My teeth were injured, got knocked out when I was a young kid, right? Having good credit is a lot like having good teeth. You got to take care from day one, right? If you have a late and it's 4 years old, put that behind you. Don't sweat it. It's old. No one cares about it, right? But you've got to take care of your credit. You got to know what's on there. So that annual credit report is obviously important. Laura, I hope that answered your question. By the way, Laura, someone who has an 800 score is going to get the same loan at almost the same rate as someone that has a 720 score, right? The difference between a 720 and an 800 in my world is like a grain of sand. Small. Okay. We talked about medical bills and then should we trust companies? I gave you my answer on that. How do I dispute? Laura, go back to the bureau, please. Is there a website that I can visit to read and learn about sound personal financial management? Yeah, absolutely. There's a bunch. I'm going to give a shameless plug to Fifth Third, our bank, our culture here, right? We are helping the public every day. And in my role as a loan officer, I help the wide spectrum, right? From one side to the other, from left to right, from affordable lending all the way to the millionaires, right? Because there's different conversations, right? But no matter whom I'm talking to, I can feel comfortable asking them to visit 53.com, right? Googling Fifth Third Bank. We're an Ohio bank, we're out of Cincinnati. There's a lot of information. There's a plethora of information. I can't stress enough that the bank that you're using and or Fifth Third has information that will give you sound personal advice. Avoiding the marketing, avoiding the people that are trying to sell you something and shouting at you on the internet is sound financial advice. I've said it for years, right? My father was a realtor, and I've said it for years. Stick with brand names you know and trust, right? So if it's a website, Consumer Financial Protection Bureau, CFPB, right? Well, you know it's the government. You know you can trust them for giving you sage information, sound information that you can bank on, okay? All right, Miss Leandra, you will have the question opportunity to ask. Yeah, we are allowing Mr. Russo to cover on his own. Thank you, as he can. Thank you for your patience. Okay. Laura C., how does bankruptcy affect my credit report and credit score? How many credit cards are too many? Let's talk about this, right? And Anna, I hope I still have time here because I do not want to cut this off. This is a good dialogue. So again, a delinquency is a late on a car or a credit card, right? A major delinquency is a major life event where something has happened and someone has filed bankruptcy. Someone has maybe gone into foreclosure. Those are major events. A major event is looked at differently between the investors. Let me go back and who are those investors? I'm a bank. You're a customer. The bank uses 4 investors, right? Fannie Mae, Freddie Mac, FHA, VA. And all 4 have different but similar guidelines when it comes to bankruptcies, right? With a bankruptcy, right? It has to be discharged for at least 2 years. For a foreclosure, it has to be out for at least 3. There's separate rules that apply to those sentences. But again, you have to let time go since the speeding ticket, right? Since the bad event, okay? How many credit cards are too many? It's a tough question, right? I think everyone needs 2 credit cards. If you're established and you're making a great living and you think you need a 3rd credit card, right? A bank card or maybe a credit card from a Dillard's or a Macy's. Okay, gotcha. But the reality is it should be from a bank you recognize. It should be from a bank in Cleveland, a credit card. Fifth Third Bank, and again, it's not what I do for the bank, but I spend enough time in the branches. I spend enough time with my bankers. We have a plethora of many options of different credit card options, but you don't need a whole bunch. You do not need a whole bunch. You need to take the ones you have, make sure the balances are appropriate, right? And make sure that you're not late. That's important, right? If you're thinking about more credit, the real question is why? Why do I need another credit card if I'm still carrying a balance on this first one? And that's probably a deeper question. But hopefully that answered your question, Laura.
We have about 3 minutes left because we want
okay.
at least 1 minute to wrap up.
Gotcha. All right. So give me a minute here on something I'm going to talk about. When you go visit these websites, you'll see something, again, Experian, TransUnion, and Equifax, about freezing your credit, right? There is nothing wrong with someone freezing their credit, right? When someone takes the necessary steps to freeze their credit, that means the bad people out there that are committing fraud and causing problems and headaches can no longer access your credit to open up credit accounts, to open up accounts or cards, or take out loans in your name, which of course would show up on your credit report, right? So please give a lot of things consideration, but high on that list, visiting the web pages and maybe even freezing your credit report to avoid some fraudulent activity. I thank you all for listening. I'm not going to get off the phone until we end, but I appreciate you guys letting me have the floor on a Friday afternoon.
Yeah, John, we have a question from Ms. Winnick. You know, she's patiently waiting. She's asking how many big loans could one person have open at one time? Example, could one person have a car loan and home loan at the same time?
Okay. The answer, I'm going to repeat the question to make sure I heard it correct. Can one person have multiple loans at the same time? Is that the basis of the question?
Yes.
And the answer is yes, right? So let me just give you an example. Someone gets out there and they qualify with their current income for a credit card. So they now have a credit card and they make that credit card payment on time. They carry a very small balance compared to the limit. And then they want to open up a car. They want to go get a new car. So they go to the dealership and they get a car loan, and the car loan is from a bank or the dealer. It's not from a finance company. And now they have a credit card and a car. A couple of years down the road, they talk to their banker. The banker tells them about some good, free, forgivable down payment assistance money. And now they go out and they get a house. So that person now has a house, a car, and a credit card. You can have them all at the same time. Each of the people behind the scenes at the credit card company, at the car financing company, at the bank for the home loan are looking at someone's income and someone's payment history. So the answer is yes. You could have multiple large items as long as your debt ratio. Of course, it gets more difficult the less credit history you have, and it gets more difficult with the larger loans if you're not making a whole bunch of money.
That was a great presentation, John. We truly appreciate it.